In today's video, I want to share with you the 5 things that always happen before a market crash. Now, I heard this from a really smart investor, and I just want to pass this along to you guys because there is much speculation that we're going to see the mother of all stock market crashes in 2026. So knowing these things can possibly prepare you for what is to come. Before I get into the video, if you got value from the video, want to like, want to subscribe. Also, before I get into the video, I've created my own AI stock one-page brief. If you're interested in AI stocks, you might want to get this. It's a free download. Yeah, I give an overview of the AI stock market or AI stocks and give away my 3 favorite AI stocks for free on one PDF. 2 minutes to read and you're pretty much up to speed. So if you want that, link in the comment description below. Completely free to download. Okay, so let's get in with the video. So the first sign is the market always feels safe and there's massive overconfidence in the market. So let's face it, when things are good, right? Everyone's jumping on the stock market. Everyone's buying. Pretty much you can buy any stock and you're going to make money. And if you buy the right stocks, you're going to absolutely crush it. You can't lose unless you're a complete idiot. And that is kind of what we're seeing at the moment. We've seen, despite all of the volatility and, a lot of, wars and everything, the Dow, S&P 500, Nasdaq, they've all reached all-time highs. So the market is very, very overconfident, especially in AI. Good example. So number one, the market is always overconfident and money's flowing into the market. You're seeing all-time highs and everyone can't lose. Now, number 2 is everyone's talking about the stock market. So if everyone's talking about the stock market, specific stocks, you got to invest in this, you can make loads of money. There's another sign that loads of retail investors have come into the market and everyone's investing their money, and that is priming the market for a crash. So that is number 2. Number 3, there's a trigger that starts dropping the market. There might be a bit of news, could be bad news, and the market starts to fall. So people think, I'll buy the dip. So people get greedy. They see the market drop maybe 5-10% in a day or a couple of days, and they think, it's going to bottom out now and it's going to start going up again. So they think, shall I buy some more? But it keeps going down. Going down. And once it reaches 20 to 30%, a lot of people, the psychology, because the stock market is all powered by psychology, usually herd mentality. Once it hits 20-30%, the doubts creep in. If someone's got 300,000 invested in various stocks, they're all down, say 30%, you're down 100 grand, you're thinking, God, is how low can this go? And you 100 grand is a lot of money. It could have taken you 10 years to save 100 grand, maybe more. So that's a lot of money for an average person to drop and have it wiped out in a couple of days. And this is where the psychology comes in. Once that threshold of 20 to 30% drop takes place, this is where most capitulations come in and most retail investors will panic sell, and that accelerates the crash, which leads on to number 4. There is no what happens to crash the market. So basically this is all about what causes the crash, and usually every crash is different. It's usually a massive piece of news about massive war breaking out, huge pandemic, massive debt, collapse, 2008, the credit crunch in America, the banking collapse. There's usually a trigger, but usually the triggers are different. Obviously, if World War III broke out, that would crash the market. So there's no clear thing that will crash the market. Each crash is different, even though there are usually some warning signs, huge amounts of debt. It's like at the moment, the UK is swarming under debt. The US government is swarming under debt. Most European countries are swarming under debt. And eventually, these governments are going to go bankrupt, which is going to cause the mother of all crashes. Added to that, the Ukraine war really shows no sign of stopping at the moment. So, if there's a major breakout of war, that could cause a crash. So basically, there's no one thing that will crash a market, but it's usually a major piece of news that comes out that will just, cause people to sell off, and then the psychology kicks in, and then it goes into a full market crash, down 20, 30% or more. And the last tip is there's no clear sign that the crash is over. Timing the crash and timing the bottom is near enough impossible. Usually the bottom comes in when things feel they're most dreary or the news is the most depressing. Usually when things feel like the most depressing, that is usually when the market can start recovering. So basically those are the 5 things that will crash a market. But there's a couple of things, something very important I want to say. All crashes follow a similar model though. I mean, if we look at, the major crashes in history, yes, billions, if not trillions of dollars were wiped out in each crash. But the market, here's the positive thing, the market always recovered and bounced back stronger. So no matter how bad the crash was, be it 1987, the 2008 credit crunch, COVID, the market, or, the war, Russia invading Ukraine, the market always bounces back stronger than before. So that is something positive about the crash. The market will always bounce back. So how can you protect yourself against a market crash? At the end of the day, market crashes are inevitable. Markets go through cycle. And in fact, we're probably well overdue a massive recession and a massive market crash. Like I say, the US government, UK, Europe, they're crushing under debt. Japan's economy is really rocky. The world is facing massive instability. There's geopolitical unrest. I could just go on and on. The war in Ukraine, that's far from over. That could kick off a major escalation there, could spook the market. The Israeli war in the Middle East is still rattling on. So many triggers here that could trigger a massive crash. And a lot of people are saying that there's going to be the mother of all stock market crashes and global financial collapse in 2026. So how can we prepare for this? Well, the only way you can prepare for it is to have a long-term investment strategy. And there's so many different strategies you can use. Really, you ideally want to speak to an experienced financial advisor or get professional advice. So if you don't want a financial advisor, you might want to invest in financial newsletters or listen to your favorite investor. And I'm going to list my favorite stock picking service. I'm going to tell you about it at the end of this video. But basically, you want a long-term investment strategy. You want to have your favorite stocks based on your investment strategy where you're dollar cost averaging every month. So no matter what happens, you're putting a set amount in every month. So no matter what happens, you're just keeping investing. And basically, no matter what happens in the stock market, dollar cost averaging will outperform trying to time the market. There's no way you can time a crash, and there's no way you can time the bottom of a crash either. So the only way to get through it is dollar cost average. Just be strong, have your investment strategy, because at the end of the day, if you don't have a strategy, you're going to follow your emotions, and following your emotions is just going to mean you're going to be a loser. So have a long-term investment strategy, and the best way is to choose your lane of stocks and dollar cost average into those stocks no matter what, set amount of money each month and just keep doing it, and just trust your strategy and trust. And no matter what happens, the market will bounce back, and it will bounce back stronger than ever. So that is really the 5 things that will happen before stock markets crash. Hopefully we don't see a crash, but I think we have to face facts. It's feeling like the market is very overconfident at the moment. There's huge hype around AI. AI stocks, billions are flowing into that. The Nasdaq, S&P 500 have reached all-time high. Crypto's buoyant. There's massive global instability. The global economy is pretty dicey. The current currencies, US dollar, pound, they're a bit rocky. Treasuries aren't great. So there's so much here that could just pop the market. So my advice is to prepare for the worst and just have a long-term strategy. Whatever that is, DCA, speak to a financial advisor, or pick your favorite stock advisory services so you can invest in your favorite stocks and get a decent investment strategy. That brings me on to my favorite stock picking service, which is the Near Future Report. The Near Future Report is run by Jeff Brown. He specializes in AI and tech stocks and crypto. And basically, AI and crypto is basically going to be the future technology. We're going to be seeing physical AI in the terms of AI robotics within the next year with the release of Tesla's Optimus robot. So AI robotics is going to be a $24 trillion industry. Trump is creating a new financial industry based off crypto and stablecoins. So if you want to learn all about this, join the Near Future Report. I've been a member since 2022. I love it. Jeff, his research is second to none and his picks do really well. So if you want to join the Near Future Report, link in the comment description below. You can join risk-free for 60 days. You can get all of his special reports completely free just for trying out his monthly Near Future Report. So yeah, give it a go. Link in the comment description below. And also link below my AI stock one-page brief, which you can download completely free. Anyway, that is what I got for you. Hope you found the video useful and informative, and I'll speak to you soon.